can draw a quick Fibonacci here, and I could get in a little more aggressively at 23.6. That's not usually my preference, because what happens is when you get to a 23.6, it's often a little shallow for a proper swing or correction. But it is an alternative, albeit a little aggressive, or what I call aggro. You can see here the 38.2 is fairly close to where the 34 EMA low is, and that would be the more conservative swing, the conservative short trigger. Okay? Knowing that the 4-hour has hooked over, though, there's probably a pretty good chance that my 1 hour is heading down lower on the dollar-yen, that my 30 is doing the same thing, and maybe even the 15. Now notice, the shorter the time frame we got, this current consolidation or congestion has started to level out the market cycle to more of a flattening cycle transition on the 30 and 50-minute charts. You see that? I'd say the 30 is barely clinging on to that downtrending cycle. The 60 is very much still in a downtrend. So if I don't like how far I have to wait for this 90-70 bounce on the 4-hour, and I would like to take advantage of a shorter swing, a smaller correction, I can absolutely do so on the 1-hour chart, taking advantage again of the downtrend, okay? And I could do a swing trade based upon a swing up to the 34 EMA, which is at 90.58, okay? Now, if I wanted to go ahead and utilize the major psychological level, knowing that just 8 pips below that 90.58 is 90.50, or go ahead and instead of 90.58, maybe go ahead and do a 90.50 swing short, utilizing the psychological level? Absolutely. Those are the two lines that I've got here right now. I'd say this area would be what we would call a swing, and set up the short trigger for a trend following short on the 1-hour dollar-yen. That's how these swing setups work. Again, trend following. All right? If we were looking at a pattern, by the way, let me take a look at this pattern here. I'm going to expand this chart here for a moment. I'm going to take us out of market memory and show you this pattern here. This was a falling wedge. You can see that here in the upper left-hand corner. You see what it says, last emerging pattern. I know it's very small, but it says falling wedge. Well, this was a trending pattern. I had a couple choices with this trending pattern. Number one, I wanted to make sure it was happening in a trend. And if you went back into market look back, you could absolutely confirm, yep, we were in a downtrending market. Thank you, falling wedge. Perfect pairing for this market cycle. I could either short the resistance of the pattern, okay, which would be the exhaustion, which is running parallel almost, or running right along on top of my 34 EMA low, my bottom line of the wave. I could have shorted on that ceiling, on that resistance, or I could have played the breakdown to the support of the pattern. Okay, so I could have shorted along the resistance, which was also along the 34 EMA low. This would have been a swing, basically taking advantage of the exhaustion at the resistance, or I could play what ended up happening, which was the breakdown through the support of this pattern. This is why chart patterns end up being so great, because all you've got to do, especially if you've got the plugin running, which, like I said, will be available at the Interbank FX site, from what I've been told, relatively soon. So I'm basically beta testing it right now. If you've got the wave on here, you can see that the overall angle is down, and then you get this overlay of a falling wedge. I mean, the pattern, the whole setup, the pattern plus the wave, just basically plots out your blueprint for this swing setup right on your chart, right? And we end up getting the breakdown right there. So was this a trend follow? Absolutely. Was I trying to pick a bottom? No way. Either shorting off the resistance or shorting through the floor in this downtrending cycle. I'd rather take the swing. I like the corrective entry because your risk is less. But certainly if we don't get the correction or we miss it, our next opportunity to follow the overall trend, which is down, is to play the break of support. Okay, so let's talk a little bit about momentum trading. Because again, my idea here isn't to cover the sum total, everything of what you need to know about swing trading and momentum, but introduce this concept of trending versus non-trending markets and the setups that we would look at for them. Now, I'm not sure what we have as far as a sideways market. Let's go ahead and scan here. I'm not sure if any of you know of a 3 o'clock market right now. I'm just going to scan through the charts here real quick and see if I can find one, a 3 o'clock or sideways market. Hopefully we have something here that's giving us a little bit of a congestion. The daily yen might have been giving us not quite perfect. No, not quite there. Not quite there. So I'm just scanning, looking for the wave moving flat and sideways at a 3 o'clock angle. That's what I'm looking for right now. Okay, here we go. Actually, two interesting looks to kind of follow up the swing. Here's a 30-minute Aussie US dollar. Angle heading down, right? While it may not be as steep as it once was, if I still extend out that middle line of the wave, as if it was the hands of my watch, would you guys agree this is still clinging to 4 o'clock? So basically, considering that the angle is still moving downward at 4 to 6 o'clock, I could swing trade this. And what does that mean? I want to take advantage of the correction. Swing is basically another way of saying correction. Swing is another way of saying a bounce in a downtrend, or a pullback in an uptrend. Another opportunity would be to pull a Fibonacci retracement. I'll talk a lot about this on Saturday, gang, because this practically deserves a session of its own. I pulled this Fibo here from the last major move, which happened to be a sell-off. Okay, Fibonacci is basically plotting where I might see resistance within this sell-off, right? And the way back up, as it's trying to retrace, right? Retracement. Think about retracement. It's retracing its steps. What was the last set of steps it had? Heading down, right? So now it's going to retrace its steps. Where is it going to find obstacles or resistance? At these retracement Fibonacci levels. So 23.6, like I said, is usually too shallow for me. I prefer at least a 38.2 or the wave itself. And lo and behold, I've got both working for me right here. Yahtzee. This is what I'm looking for. This kind of overlap. This is fantastic. So I've got the overall downtrend. I've got my swing. I've got confirmation of an obstacle, which is where I'm hoping prices will exhaust. Here's where I'm hoping that the buying momentum will meet some selling resistance. Okay, and that the overall downtrend will resume. Okay, 38.2, bottom line of the wave, that's what I'm talking about. Okay, this is a swing trade. Now contrast that with this 15-minute chart. This is not a perfect example. This is definitely something that's about as 3 o'clock as we've seen so far, but what are we looking for a 3 o'clock wave? Grab that segment line tool again, go with the middle line of the wave, which has got a slight angle. Okay, but this is about as 3 o'clock as I've seen so far. Let's talk about what it means to momentum trade. Momentum trade means we are waiting for the momentum to reveal itself. Okay, and I like to use that MACD traditional to confirm momentum as it's breaking out. Now, I'm going to go ahead and change some properties here. I like my colors to be a little bit more visible because I have this black background, so maybe I'll go ahead and shade them white. I can see that a whole lot better. And what I'm going to do now, I'm first of all going to assess whether it's a 3 o'clock angle, which I think it is. It may continue moving sideways for some time. I would have loved to have had some sort of triangle pattern, but I realize it takes some time before we can get the support and resistance that we would need for a triangle setup. Okay, I see that the MACD is positive. What I would typically look for here is some sort of consolidation congestion pattern. Triangle, rectangle, pennant, something. It could be an asymmetrical or symmetrical triangle, right? I could use the PRS. Basically what's going to happen here is I'm going to end up waiting. Okay, I need some more touch points before I can get some sort of consolidation or congestion pattern. And when prices, if and when prices break through the support or resistance of that pattern, I'm going to confirm it with the MACD traditional. And the confirmation is super simple. Basically what you do is, as it's plotting right now on the positive side of the zero line, the bullish side of the zero line, if I break up through resistance, I have to have a positive MACD. The MACD is the last step. It is not the reason for the trade. It is the confirmation of the price break. Again, let me say that again. The indicator is not the reason for the trade. It is simply the confirmation of the price break. Okay, really important distinction there. So if I break up through that resistance, I want the MACD to be confirming. So if I get a break up higher, and this is positive,